Imagine, if you will, you bought this property some years back, paid $500,000 for it, and you paid down the loan. You only owe like $200,000 on it. You feel confident about the real estate market and thinking, hey, gosh, it's worth $1 million now. What if I sold it and bought another place for $2 million? Well, if we sell for $1 million and pay off the loan of $200,000, forgetting fees, that leaves like $800,000. And $800,000 should be enough to buy a $2 million place with room, maybe a little room to spare. So you go to your tax person, make sure you're thinking right, and your tax person delivers the news. Maybe up to 40% of that gain, of your $500,000 gain, goes to capital gains taxes. So your $800,000 that you had to put into that $2 million property just went down to $600,000. You're not so sure it's even worth doing it. Who wants to pay $200,000 to the government if they don't have to? What if there is a way to defer those taxes? Well, there's a tool for that. It's called the 1031 exchange. So first of all, let's start out with what's a long-term capital gain. A long-term capital gain is essentially the profit you make on something that you bought and held for over a year. The government, both the federal and the state, charges tax on that. A 1031 exchange allows investors to defer capital gains taxes from the sale of an investment property, provided that the funds are exchanged or reinvested in like-kind property. This is for investment properties or properties used for business, not your principal residence. There's other tax exemptions available for you there. In simple terms, a 1031 exchange is where you sell what we'll call the relinquished property and roll the proceeds through an accommodator, or what we call a qualified intermediary, into the replacement property. The replacement property needs to be of equal or greater value, and if you had a loan on the first property, it would need to be of equal or greater value. If you do not meet the equal or greater value, there will be some portion of your proceeds that will need to go towards capital gains taxes. When you sell your property, the funds go into an account that's controlled by the facilitator. The biggest no-no, and I mean the biggest no-no, is for you to touch those funds. If you close escrow on your relinquished property and you touch that money, you just had a taxable event. There's no exchange. Game over. When you're doing a 1031 exchange, the timelines are critical. When you close escrow on your relinquished property, that's day 0. So you've got 180 days or until you file your next tax return to close escrow on the replacement property. But that's the easy part, is the closing within 180 days. The real challenge is you have just 45 days to identify the replacement property. And especially in a hot real estate market, it's sometimes hard to tie down that replacement property. I advise, while you're in escrow, closing on the one you're relinquishing, you really got to make sure you start looking and figuring out what you're going to do on your next property. There's a couple of special circumstances or questions I get all the time. First of all, you can do it in any state within the United States, but you can't exchange from the United States to out of the country or vice versa. Two is you can do this with vacation homes, but there's a very specific rules that must be adhered to in that. And it's a little more than we go through in this, and I'd be happy to help you there. Third, you can do this with some construction. Roll some of those funds into some construction. You have to be very careful on those and make sure and know the rules. And last is something maybe most interesting. There is something called a reverse exchange, where you buy the replacement property before selling the relinquished property. The one catch is you have to be able to pay cash for the replacement property before selling your other one. Not everyone has the resources for that, but if you do, that's maybe another way to approach this. This whole idea of a 1031 exchange or taking profits and paying taxes or not and all that, it's complicated. It's a lot. And even when you decide to go forward with the exchange, it's complicated and it's a lot. We're more than happy to talk with you and help walk you through the process of a 1031 exchange. We've done many of them over the years, and who knows, this may be the perfect strategy for you. So if you learned something today, found this video interesting, or think someone else might, please feel free to share it or subscribe at the button somewhere on here, and we'll be sure and get you more videos.